All right, you guys, welcome. Doug McKay, antiwallstreetguy.com on the 18th of November, 2011. As of yesterday's close, we have the overall trend in the equity markets as short, meaning down. When we first looked at this potential triangle, pennant pattern, flag pattern, it was roughly about a week and a half ago when it looked like this. And then the next day, as opposed to closing above this downward sloping trend line, we actually were down pretty heavy on Wednesday the 9th of November. So that initially took apart this short-term triangle slash pennant pattern. And then as of late, after the 9th, we were actually holding those lows, and we created, which everybody was watching lately, including the Wall Street Journal, was a bigger triangle pattern on a daily chart. Yesterday we broke below that. We also broke below the 30-day moving average and support, big support, which we feel is at 1228 on the S&P. Therefore, we have the overall trend as down, meaning short. That's our reasoning. Now, to the bulls, we did hold the 50-day moving average. We are still trading above the 50-day moving average, and we are still trading above major support of 1200. We think we're headed to 1200 to test it, and we think we could run as high as resistance up to 1250. But for now, we have the overall trend is down. We possibly see a print of somewhere between 1200 and 1150 on the downside as well. But as it stands right now, we have the overall trend in the equity markets as short. All right. So for our purposes in the managed accounts, we're anywhere from 15 to 20% short with an existing short position we had on, and the balance would be in cash. When we take a look at the NASDAQ, this chart looks a little worse. We actually did close below a level we mentioned on the radio the last several weeks of 2600. We were at 2572 today, which is also below not only support of 2600, but the 50-day moving average, which is this blue line here. When we take a look at the Dow, which I believe at this time is the only, as of the close today, the only positive indice out of the three big ones in the black so far in 2011. Our line in the sand on the radio show last week was 11,750 if you were trading the diamonds. So we closed at 11,796. Decent support, and we believe a target, an obvious target would be 11.5. Okay, probably next would be 11,750 and then 11.5. When we take a look at gold, which is what we'll finish up with the short video tonight, we are out of gold, out of GLD. In hindsight, I wish we would have sold half when we filled this second gap, gap number 1. Gap number 2, we talked about it, but I did not do that. We just held on to the long position. But we did exit that long position yesterday. We would probably have to crawl. I probably wouldn't get interested in this again unless we got above 172. Might even wait for it to print 176. In other words, get above this overhead supply. Support, short-term support right now, I'd say would be right around 164. We would definitely probably take a shot at it at 160. 164, we'd probably let it go. So let's just say our buy points would be, for now, 160. If it gets that far down, we'd play a bounce there. Again, we'll talk about a stop at that time if it gets there. And a trade probably above 175. All right, you guys, that's it. Short video. We have the overall trend in the equity markets as short, meaning down, again, for our purposes. In the managed accounts, that's about 80% cash, 20% short. Possibly we'll get a bounce here up to 1250, which is major overhead resistance. So we're kind of in that tight trading range right now between 1200 and 1250 at this time. Thank you. Doug McKay, antiwallstreetguy.com. We'll see you guys next week. Probably see you, I believe Friday will be an abbreviated day. So we'll either see you Wednesday before Thanksgiving or Friday. Thanks.